Investors and traders, welcome to the channel. Today we'll be taking a look at the Forex markets. We'll cover the major currency pairs. I will try to keep the video short, so we'll not be able to take a look at all the major indices which we have been following, about 5 to 6 of them. This video is for educational purposes only, and it is not a financial advice. So guys, what we are looking at is the daily chart of the dollar index futures. Here, based on our last video, if you recall, we had been waiting to reach the dollar index to anywhere between 105.55, which was the ABCD pattern, to 106.07, which is the 38.2% Fibonacci retracement. So it looks like what happened over the few days is trading days. Our target of ABCD was met. The price go as high as about the high was on the day 105.87. So we did miss the 38.2% Fibonacci retracement by a few points, and we have seen a sharp move lower. Now, because of the ABCD completion, the dollar index is at a level which is really important to watch, the 104.18 level. If the dollar index moves lower from here, then there is going to be a significant dollar weakness to come, in my opinion. Otherwise, there is a possibility this might act as a floor at this level, and we could see stronger dollar. So 105.18 is the one to watch, whether it's going to act like a floor or a ceiling for the price movement. While we're on dollar index, let's take a longer term view as well. It's a weekend, so we like to take longer term views over the weekend videos. So this is the weekly chart, and here you can see right this top came in at the 1.618 expansion of this move here, and we also had an ABCD shown in the red here, and then we had something which I'll show you on the monthly chart. So that's kind of convinced us that okay, we were near a top, and this is like we have covered in the daily chart, nearing the 106.07 level. So this is the longer term monthly chart. I've done a video entirely on it explaining what it is, but in a nutshell, if you look at the dollar's move going back in August of 92 till the highs sometime in 2001, it took about 10 years, and then we have a similar move from around 2008 early, about 12 years, and the move is symmetric. So this makes us believe that perhaps longer term dollar may have topped, but it doesn't mean it cannot have rallies, in fact sharp rallies, because if you look back what happened here, when it had topped, there were sharp rallies, like for example from 3rd of September 2001 right into the 1st of February 2002. So it's a possibility. That's why we are watching 105.18 level very, very carefully. Okay, so let's go to Euro USD. Okay, so Euro USD, we were looking for it to reach to 38.2% retracement around 104.55 level, but it's gone into a trading range right at the this level of 105.30, and with the weakness in dollar we have seen, it has gone and tested the top of the range. So we'll keep on watching how the dollar is going to trade, and if it moves slower, then we're going to see higher prices. Perhaps the Euro USD reaches to about 38.2% Fibonacci retracement at 107.25 level. So it is this level here, and it'll be an interesting level to watch, whether it's going to find some resistance here or not. And just quickly looking at the weekly chart, what we see is that the pullback in Euro USD was right at to the 20-week moving average, and from there it has found support. In fact, what we can see is for 1, 2, and 3 weeks, this level has been held of 105.40, and that's important to look at, because these are kind of support levels if it goes lower from here, then of course opens up the floor for lower prices. Okay, so the other one we're gonna take a look at is the GBP USD. So this chart is really interesting, the GBP USD. Just like the Euro USD, we were actually looking for this to reach to our support zone between 117 and maybe even potentially down to 116.50. We have a combination of 38.2% Fibonacci retracement from a much lower low, and also 61.8% retracement coming from the low from here. So it was going to be potentially a good support. However, it seems to have tested the lows of the trading range, and because of the weakness in the dollar, it has moved higher and taken the swing high out here, which is pretty good. And just looking at this, so it did test the 38.2% retracement, moved lower a little bit, but if you look at this, it's acting pretty strong actually. So if we just go back to let's say a 15-minute chart, so we draw this, what we see is that we have got at 120 to 38.2% Fibonacci retracement. So this level is going to be an important level to watch if this is held over the few hours, because we're just looking at 50-minute chart, then perhaps it means there is good support around here, and these highs of 121 could be challenged again and maybe even surpassed. Okay, so let's go back to the daily level, and we'll just quickly look at the weekly chart. There we go. So on the weekly chart, the way I've drawn the Fibonacci retracement is just by taking the body of this candle and then the top here, which is a double top, and we reached right to the 38.2% Fibonacci retracement. So this 1.1815 level is pretty important, and there's possibility that if dollar weakness continues, then the highs of these trading range of 123 or roughly 124 will be challenged again. And we also have the 200 week average coming in, moving average coming in 128.7, potentially could go higher up there. So we'll have additional Fibonacci levels as well, but for right now we're just watching this. And the reason I took the body of the candle was that because it just could have been, when the situation happened back in September, it was because of the budget which had come in the UK, which is not liked by the markets at all, and it just could have been a low liquidity position, and maybe even just one trade could have moved it so much, because price moving in a sort of a vacuum condition. That's the reason, just to explain. Okay, and the last one we will take a look at in terms of the major currency pairs is the Aussie dollar. So this Aussie dollar one is actually a really interesting one because it is sitting right at the 61.8% Fibonacci retracement. And if you look at this, it's been there for 1, 2, and 3 days. So it's been quite some time. It's spent about 3 days out of 5 days of trading week here at this level. So watch for this moving below the 61.8% will of course cause the currency pair to move lower. But here it looks like a pretty good support, and maybe perhaps what's going to do is if price begins to consolidate here, there's a chance that we'll move higher from here, because if the support is held. And if we just do a Fibonacci retracement, the level we'll be interested in will be 0.6790, just call it 0.680. Roughly that's where the 38.2% Fibonacci retracement comes in. Okay, so just quickly having a look at the weekly chart. So still on a weekly basis, pretty negative, but what we have seen is a good consolidation at the 61.8% Fibonacci retracement. So guys, just really quickly on the cryptocurrencies, just let's take a quick look at Bitcoin, BTC, oops, and here guys, I had done a video quite some time ago, And I had mentioned this level of 28,000 because it was a 38.2% Fibonacci retracement, also 1.27 expansion of Fibonacci expansion. We never even got there, so it looks like the price has moved lower. Looks like there could be more pain because of what has happened in SVB, the Silicon Valley Bank, and also the USDC stable coin. The parent company said in a report that they were holding about 8% of their funds with SVB. So that caused an issue with the stable coin pegged with dollar breaking. It's just gone below the $1 peg. So this means there could be further pain in the making. So this is what we are looking at for now. If you like our analysis, then please do subscribe to the channel. Thank you very much. Good luck and good trading.